sovereign wealth funds control trillions and quietly rewrite the rules of international politics. Their hidden moves shape everything from climate deals to trade wars. And number one reveals a strategy so secret even the most seasoned diplomats miss it. Stay tuned to the end. Diversification is the first line of defense for sovereign wealth funds, and it also becomes their most powerful diplomatic tool. By spreading assets across continents, stocks in Europe, bonds in Asia, commodities in Africa, these funds reduce risk while establishing economic ties that can translate into political goodwill. For instance, Norway's government pension fund Global holds stakes in over 9,000 companies worldwide, creating informal channels of influence wherever those firms operate. Analysts say this web of ownership often grants SWFs a seat at boardrooms, subtly shaping corporate strategies that align with broader national interests. Up next, we'll see how strategic real estate purchases turn financial portfolios into geopolitical footholds.
Strategic real estate moves let sovereign wealth funds plant physical roots in key markets, and the impact goes far beyond rent checks. By buying iconic office towers, hotels, and logistics hubs in major capitals, funds like Singapore's GIC or Abu Dhabi's Mubadala embed themselves in the economic pulse of those cities. These properties often become venues for high-level meetings, providing a discreet setting for diplomatic dialogue. Moreover, ownership of critical infrastructure can give host governments a subtle incentive to align policies with the fund's home country. Some observers note that such holdings have helped smooth trade negotiations and secure favorable regulatory treatment. Next, we'll uncover how political lobbying in emerging markets amplifies this quiet power.
Political lobbying in emerging markets is where sovereign wealth funds turn capital into counsel. Rather than relying solely on market forces, many funds hire local advisory firms to influence legislation, tax policy, and investment rules that affect their holdings. In nations like Brazil and Indonesia, SWFs have funded think tanks and sponsored policy workshops, subtly steering agendas towards stability and openness, conditions that protect their long-term returns. Reports suggest that such engagement can sway decisions on everything from mining permits to renewable subsidies. By shaping the regulatory environment, these funds secure a more predictable landscape for their assets. Coming up, we'll explore how funding renewable energy transitions blends profit with geopolitical leverage.
Funding renewable energy transitions allows sovereign wealth funds to power both green futures and geopolitical clout. Nations rich in hydrocarbons, like Saudi Arabia's Public Investment Fund, are increasingly channeling billions into offshore wind farms and solar projects abroad. This not only diversifies their own economies but also positions them as partners in the global fight against climate change, earning diplomatic goodwill. According to industry analysts, such investments often come with preferential financing terms and joint venture rights, giving the home country leverage in energy-dependent regions. The ripple effect can shift trade balances and even influence climate policy negotiations at the United Nations. Next, we'll see how influencing currency stabilization adds another layer to their toolbox.
Influencing currency stabilization is a subtle, yet potent way sovereign wealth funds protect their overseas earnings. By coordinating with central banks or participating in sovereign bond purchases, these funds can help smooth volatile exchange rates that threaten portfolio returns. For example, the Qatar Investment Authority has been known to collaborate with regional monetary authorities during periods of oil price shock, providing a buffer that steadies the rial. Such actions are often reported as market-friendly interventions, but they also give the fund's home government a voice in monetary policy discussions. This financial stability can translate into broader economic confidence, encouraging trade and investment flows favorable to the fund's strategic goals. Up next, we'll discover how spearheading massive infrastructure projects cements their influence.
Spearheading infrastructure megaprojects turns sovereign wealth funds into architects of national development. By financing highways, ports, and railways, funds like Canada's Canada Pension Plan Investment Board embed themselves in the backbone of economies far from home. These projects often come with long-term concession agreements, granting the fund control over tolls, fees, and operational decisions. In many cases, the host country becomes reliant on the fund's expertise and capital, creating a partnership that extends beyond mere finance. Researchers estimate that such involvement can sway policy priorities toward projects that benefit the fund's broader strategic interests, such as enhancing trade routes that favor their export markets. Following this, we'll examine how shaping trade agreements amplifies their reach.
Shaping trade agreements places sovereign wealth funds at the heart of international commerce. By leveraging their investment footprints, these funds can lobby for tariff reductions, market access clauses, and regulatory harmonization that benefit their portfolio companies. The United Arab Emirates, for instance, has used its sovereign funds presence in Europe and Asia to advocate for favorable trade terms that open doors for Emirati businesses. Analysts note that the mere prospect of substantial capital inflows can give a fund's home country a bargaining chip in multilateral negotiations. Consequently, trade deals may reflect not only diplomatic priorities, but also the economic interests of these powerful investors. Next, we'll reveal how backing sovereign debt rescues can pivot entire economies.
Backing sovereign debt rescues gives sovereign wealth funds a lifeline and a lever. When countries face fiscal crises, funds like Norway's GPFG or South Korea's KIC often step in with sizable bond purchases, stabilizing markets and preventing defaults. This assistance is frequently framed as a commitment to global stability, but it also grants the fund's home nation a seat at the table during restructuring talks. Some reports suggest that these investors can negotiate policy concessions, such as fiscal reforms or strategic partnerships, in exchange for their support. The resulting influence can reshape a nation's economic trajectory, aligning it more closely with the fund's long-term strategic vision. Coming up, we'll explore how driving technological innovation adds another dimension to their power.
Driving technological innovation lets sovereign wealth funds steer the future of industry. By allocating capital to cutting-edge sectors, artificial intelligence, quantum computing, biotech, these funds not only chase high returns, but also position their home countries at the forefront of next-generation tech. The Singaporean Temasek Group, for example, has built a reputation for early-stage investments in global startups, often securing board representation that influences research directions. Such involvement can foster standards and regulations that favor the fund's strategic partners, effectively shaping the global tech ecosystem. Moreover, these investments can create exportable expertise that bolsters the fund's nation's diplomatic standing. Finally, we'll uncover the ultimate revelation: how sovereign wealth funds orchestrate global governance shifts.
Orchestrating global governance shifts is the crown jewel of sovereign wealth fund influence, and it may be the most consequential yet unseen force in international policy. By pooling vast resources, these funds can sponsor multilateral forums, fund research institutions, and support policy think tanks that shape the agenda of organizations like the G20, the International Monetary Fund, and the United Nations. Their contributions often come with subtle expectations, promoting standards that align with the home country's strategic interests, from climate commitments to digital trade rules. Scholars argue that this financial patronage creates a network of soft power that can tilt the balance of global decision-making without a single vote in a parliament. In essence, sovereign wealth funds have become the quiet architects of the rules that govern our interconnected world.
We've peeled back the curtain on how sovereign wealth funds steer everything from real estate to global governance, showing just how deeply financial power can infiltrate policy. If you enjoyed this deep dive, hit subscribe so you never miss another mind-blowing list that uncovers the forces shaping our world. Which of these 10 insights struck you the most? Drop your thoughts in the comments below. And if this video opened your eyes, give it a like to help the channel grow.